George Goudelias, despite a lot of warnings, interest rates just don't seem to head upwards. So why is now a good time to be in a floating rate loan fund?
Well, we feel right now in the RidgeWorth Seix floating rate high income fund, you're earning close to a 7% yield. And although you're not seeing interest rates rise, you have that inflation and interest rate protection in case they do. In case something unforeseen happens and rates do rise, you do have that protection. And if rates don't move up, you still have a 7% yield.
And why do you think they've performed so well this year?
Well, we had a pretty sharp sell-off last year because of energy. So we've seen a snapback in energy prices and an economy that, while not exciting, is still growing and allowing companies to grow.
All right, and what is your interest rate outlook? Because I suppose you're going to get a tailwind when rates finally do rise.
That's right, but for the near term, near to medium term, we're still of the opinion that we'll be lower for longer, with central banks around the globe on hold. In the U.S., we may see something this year, we may not, but again, given the track record, we're staying lower for longer.
And issuance is a big part of returns in the floating rate loan world. So where's issuance so far in the second quarter, the start of the third?
Right, so second quarter it's picked up, still down year over year, still down about 20% year over year, but we have seen issuance pick up, especially now at the beginning of the third quarter. So we feel that issuance will be healthier as we enter the second half.
And which sectors are doing the best for you? I know energy has made a nice comeback over the first half of the year. Does it have longer to go?
We think energy probably plateaus here unless oil rallies sharply. So we've seen a nice rebound, especially in the MLPs, the pipeline companies. The service guys are still struggling, but we feel we'll see a little more upside in the energy space, but likely a plateau.
And I know another thing that you're watching are the broadcasters.
Right.
And that's because this is an election year, so they're going to get a lot of election dollars, right?
They spend a lot of the politicians as on cue spend money during election campaigns. Obviously, this year is also a presidential campaign. So in even years, you've got political spending. On top of it, you have Olympic spending.
And then finally, has the Brexit impacted your market at all?
Only for a couple of days. It was a very muted impact, and by the following week, we saw prices rebound, and they've continued to rebound since.
All right, well, thanks a lot, George.
Thank you, Greg.
Thank you for watching The Street.